If that's quite short, that'd be a bit of a break, because I think yours is a portfolio, so it might be a slightly longer view display.
Everyone says no deal straight away. So.
Let me just find. There it is, Olsi. Oh, it's in Keynote, that's very good. Right, so tell us what you're looking at here, Olsi.
Hi guys, so this is a block of apartments. I originally started looking at holiday lets, and I spent the last 3.5 months on the motorway, 2 days a week, from London to Lake District, to Cumbria, Northumberland. For the last 3 months, I would say I've been there every week. I spent 2 days on the car. Managed to get some deals. Unfortunately, a couple of them, we lost them because we didn't have enough funding. They were very quick. So I just said, I'm just going to take a break for a month, and I'm going to re-look at a different strategy when I come back. Just something that I feel is near to home, something that can work with someone. And one of my really good friends, James Jarrett, I've known him for about 1.5 years now through VIP. We've become really close friends, and he's been working on a model of buying blocks of apartments. So while I'm looking for my own deals in Lake District and Northumberland, what I do is, I'm just sharing this just in case it helps somebody, I go and spend the night before in the pubs in the local area. So I look at where's the best inn in the area, and I go and stay there for the night. And what I do is I just go around talking to everybody, what are you doing, asking questions, but also say, if anyone is looking to sell like their large homes or holiday lets, or blocks of apartments or portfolios, we'll buy them. So because I know that my friend is looking for them, but also looking to buy holiday lets. So the reason I'm saying that story is that I get a phone call from the person that owns this, that I met in a pub. I met his sister in a pub, and I was chatting, and then they were like, oh, by the way, my brother's selling a block of flats, you're interested in that? I was like, yeah, we're interested in that. So I get the phone call, I ask the questions, and then straight away we jump in the next day, me and James jump on a train, we go to Penrith, we have a chat with the owner. So the person who built these passed away about 10 years ago, so he left with his wife, and they've got a huge portfolio of blocks of apartments that they built. So this was the first one. We looked at this, and they're quite motivated to sell very quickly. She wants to go away on holiday, I'm not sure the reason, but we got this, and the price for this one, he wanted £600,000. We didn't negotiate prices, then we just had lunch with him, we looked at everything, and we secured it for £500,000. So I would say that's a massive discount, totally off the market. He did not want to put it in the market because he didn't want the people in the local area to know that they're selling, that there's like, I don't know, that was the reason why I didn't want to. And he didn't have a very good experience with agents prior, so that's why it's come directly to us. So just want to move into the second bit, Clive, into the presentation. Sure. Just want to tell you a little bit about the Lake District. So anyways, so going back to the story of why I'm working with James, I sort of had a chat with him. I was like, look, I'm really struggling with these holiday lets at the moment because I'm always on the motorway, they're not near my house, there's a heavy management, there's always a refurb to be going on, there's always this, they have to add a lot of value to the property, and it takes time. By the time we finish this project, I'm going to be 1.5 years with my head in this project, and yeah, we'll make some money, but is there a better way? And it's like, I've been working with blocks of apartments for the last 4 years, and I believe this is the best model right now we're working on, because you can buy them at bulk, you can buy them at wholesale, meaning that, you know, if Tesco's is going and buying in a loaf of bread, they don't pay £1 for it, even though we go and pay £1 for it, they buy at 20p, and we're going there and buying them as a wholesale investor, meaning that we can negotiate a better price because we can buy them for sure, and we buy them in cash. So there is no planning risks in that, because you just got buy to let and you've got tenants in. There is no financial sort of complications because you're buying it in cash at a discount rate, and there isn't any sort of management risk because it's not heavily managed like a HMO or a service accommodation or a holiday let. So from those 3 points, I was like, okay, well, how about I'll work with you, I source the deals, I source potential investors, and you help me with your system, and we partner up together, and we create a platform for any investor, from small cap investor to large cap investor, to bring people in. And he works with mainly family offices and sort of high net worth individuals. He's got like 4 investors who put all the money into his deals. And I just propose that we go out there and we meet small cap investors between 50,000 to 500,000, where they can put their money into a deal, take all the money back out within 12 months and have some equity if they wanted to, or have a return for their money, meaning they don't have any risks, they just give us the money, we then guaranteed to give them the money back within 12 months. And the way we do that is that we purchase the whole block of apartments in one go, we bring the rents up to the right value where they should be. These ones are at the moment at 420. However, if you go to the next page, so this is the Lake District, by the way. 17 million people visit the Lake District. It's it's one of the most visited areas in the UK, and so we're not just buying these blocks of apartments in areas where we're just going to get a 30% discount. They're going to be in really good areas. It's not just the discount. It's not just the main driver. It's the asset has to be the right asset. So this one, so these are the blocks. So they're very good condition. These are all the rents at the moment that we can get from the agents. So about 650. They're on at the moment at 420, 450. So clearly they haven't put their rents up to the market value. Can we go to the next page? This one here. So these, at the moment, the valuation for these for the blocks of flats are between 98 to 230. So we reckon these flats will be like 120, 110, right? That's how much the valuation will be. So we're buying them at 500 over here and at £71,000 per unit, right? And we'll buy them in cash within 6 months. We bring the rents up. What we do is that the issue with commercial investments is that you're paying premium on your lending. So when you go into a lender, you're looking at paying like 9%, between 6 and 9, depending on what they are. So what we do is we take the whole block of apartment, we split the title, we split the freehold, and then what we do is we separate the flats into different lenders, and then we benefit from the buy-to-let sort of system. Then we're using 5% lending. So we're saving that 4% on the lending here, and also we get this discount over here, and that's how we can release all the money up within a year. So I think, to me, the timing right now is the best time, because a lot of people are hurt by the interest rates. A lot of people that have these properties in commercial are hurt by that massive amount, and their rents haven't really gone to where they need to be. So we believe that in the next 18 months, the biggest opportunity that we've seen in the last 15 years to invest and buy these properties at a larger scale. Hence, I'm working this model right now, and this is what I'm looking to get. If you look over here, the last presentation. So these are the numbers for this one, if you want to take a photo. We're looking for investors for this deal. We've got 6 other deals that James is working on at the moment, but this is my deal, and I brought it here just in case anyone wants to get involved. We prefer a general interest only model, but we also can do a hybrid system where you can have a percentage on this and from the upscale of the investment, or we can look at a different model if that's something you're interested in. Talk to us. That's it, really.
Excellent.
Any questions?
This is a conundrum I'm going to come to in my presentation. You're buying it at 500.
Yeah.
So on land registry, the block is going to get stamped at 500.
It doesn't. Anything you buy on commercial rates doesn't get registered on land registry. So what happens is that people think when you buy commercially, it goes into land registry. It does not go. That doesn't get registered.
So your refinanceability is because you bought it on commercial loan. Because you're refinancing it, aren't you?
Yeah, we're buying in cash.
Yeah, but you're looking to take out the refinance, the gap between 500 and 600.
This will be valued at 800 in a year.
So it's going to be valued at 800 a year because you split. That's why. The sum of the parts is greater than the whole.
Yeah.
Okay.
But this deal is worth 300 grand. Like we're just putting the money in, taking it out, and then we'll still own the assets. And what I didn't share is that what we're looking to do is we're looking to get 1,000 units in the next 4 years. So James already secured 90 at the moment, 90 separate units. We're looking to secure in the next 3.5 years to have 1,000 units. And the plan is that, if you look at the by the way, if you look at the macroeconomics at the moment, what's happened is that there's the bridge model where you're looking at all the people are going to be struggling in the next 20 years to get into real assets, meaning that the bridge is opening up, right? It's going to get even more difficult for people to buy assets. And if you look at people like Lloyds, they say they want to be the biggest asset owners in the UK, meaning the lender has realised how important the assets are, so they want to be the biggest owners. So they want to control pretty much the whole UK market. And what we think is going to happen is that the more units we buy, these lenders then want to buy these assets from us. So we're looking at an exit plan of 20 years on these assets. So I think people are going to struggle to get into the ladder in the next 15, 20 years, so everyone's going to be renting. And yeah, so that's why I think this model is a fantastic model, especially right now. In a year and a half, when interest rates go down, a lot of people are going to get into the market, therefore you're not going to see these 27%, 30% discounts. And this is the standard discounts that James has been getting for the last 3 years. He's got deals at 36% discount, 40%. Some developers are going bust and stuff like that we're picking up deals. He won a Property Award winner 2018, also has raised over £90 million of investment. So partnering up with someone that has already got the track record for me was a very a good decision, instead of just working on my own and just raising, just having JV partners, one person that can raise the money, because I had problems with that because we didn't have enough money to do the bigger deals, and we had too much competition on smaller deals, so that's why I'm working on this model right now. So if anyone wants to know more about this, I'm happy to.
Georgina first, and then Michael.
So just a clarification on Ryder's question, then my own, if it's okay. So you're saying that it doesn't get stamped on land registry because it's a commercial property. So what's the planning class? Like, help me to understand what it needs to be not to be stamped. Because presumably it's sui generis.
So no, this is just a standard. These are standard buy-to-lets. It's literally just a standard buy-to-let.
So how is it not going onto land registry? Help me understand that.
When you do a commercial transaction, commercial transactions don't get registered in land registry. So afterwards, it will be when it's split into titles, right?
I think if it's a commercial loan, the stamp duty you pay will be reduced, I agree.
It gets
But
stamped.
it'll get stamped.
It will get stamped. I'm not sure how that's done. I don't actually know
When
that.
I was
So.
looking at blocks of flats before, they were going onto land registry, so just maybe something just to double check. And then you mentioned about changing title splitting. So we
Yeah.
looked at this on 6bed, so I'm interested. You mentioned about title splitting and then getting mortgages based on the flat by flat because it's then buy to let. But then what I found when I was doing the numbers is you've got, the 7 there, you've got 7 sets of legals, right? So what I mean by legals, I mean with three grand or whatever the solicitors, the lender solicitor is going to charge you per house.
Yeah.
Yeah, you're getting a reduction in the interest rate, but I'm just curious, because when I looked at this for a 6-bed, and it might be different if you're looking at more bedrooms like 12, for example,
Yeah.
it was actually better to take the higher interest rate and just get one mortgage for the house, because by the time you paid all of the solicitors, the lender's legal fees, it just works.
I think you're right. There's all the small things, this money here. I think I don't really understand that part of it, but James seems to take all the money out. So he's the one that is taking care of that, and he works. He's a partner. That he works with. He's an accountant. He used to work for one of the main fours, Deloitte or I'm not sure what the company they work for, but he was an accountant for 28 years. So we've got a team, meaning that James negotiates the deals and brings the finance in. There's somebody that sits on the back end that deals with all his legal team. There's like a system that's already working. So I'm not really at that stage. This is just a deal that came 2 weeks ago. Prior 2 weeks ago, I was working on holiday lets on development. Right? So I'm working with him because I think it's a great model. So I'm just being very honest with it. I wasn't prepared to bring up this today. I just typed it in. But this is the kind of these numbers are very kind of rough around it. But as an investor, so if you're investing in some of our deals, the reason I'm showing this stuff is that you would get all your money back within 12 months, and I think that's pretty secure in terms of the numbers. So,
Michael, please.
Yeah. So thanks, Georgina. But this is a 7-bedroom or 7-room property.
yeah.
What sort of property is it? I don't think it's sort of. Is it a Victorian house or something?
No, these are just like just 2-bedroom apartments.
So what's that one?
So the square foot, if you go here, Clive, I think it's got so these are the if you go below that, sorry.
So is it kind of, when do you know when it was built?
It was built 20 years ago. So we don't buy anything built recently. Reason being is the build quality is not great. So we look at anything that's like between sort of 18, 20 years. So this was built by a local builder, which is a family of people that own this.
Yeah. So you've been to 1919 maybe.
Yeah, 20 years ago, yeah, something like that.
Thank you.
Can I just ask, perhaps Raj would answer this for me, if you can, why you were concerned whether the block of flats is registered on land registry?
So the point I was trying to understand was how is he refinancing out adding value? And what I'm hearing from Olsi is the value's being added by taking one title and splitting it into multiples, raising the rentals as well. So there's a capital appreciation, and then there's
a discount. So the first one is a discount. The first lever is a discount, which is the 30%, 27%.
Usually, if you buy at a discount, you want to try and figure out how you can refinance back out and take that discount out. But that's not what's happening here. It's slightly different.
Yeah, understood.
It's doing it in a kind of roundabout way. So.
Yeah, it's fully legal. There's nothing that we're doing is like inflating. We're not inflating the price of the asset. We're buying it at a discount. So I think there's many people.
Daphne, please.
There's many things you can do.
Daphne it does know a little bit about title splitting on blocks of flats, so hopefully she can contribute.
No, so yeah, you've bought it, you're buying it at a discount, which is great. In order to split it, there has to be a sale, so you're going to be selling it to Olsi Company 1 buys it, Olsi Company 2, it sells the titles, the split titles to. So Company 1 will keep the freehold.
Exactly, yeah.
Right, Company 2 will keep all the flats.
Yeah.
Company 2 has to buy them on paper, it's not going to exchange of money, but it has to buy them at the fair market value. So they won't show, this company will show the full price.
Mm-hmm.
So therefore, when you borrow out,
You borrow it at that.
borrowed at that price, which has to be, otherwise HMS, and because if you do that in a group,
Yeah.
which I've just done, you're not paying any, because there would be otherwise SDLT,
Yeah.
there would be capital gains because this price is less than this price.
Yeah, yeah.
But if they, which I'm sure your guy knows all about,
This is his
but
system, so yeah.
it's kind of a bit woolly, and then the price that gets registered at the land registry is the new price.
Yeah, yeah. So I don't know the ins and outs of that. If you want to know more, then I'm happy to.
I spoke to James about this quite a while ago actually, and it is exactly that. So on the day of purchase, I think Company A does what we describe as well. So he's described.
There's a bit of jiggling about. It's a bit of jiggling. You put this there and there, and because the thing is, if you own the freehold in the same company, the lenders will still look at you as a commercial. So it has to be gone to a different entity.
Yeah, as long as it's just jiggling about, not Aaron calls it jiggy jiggy.
No.
I've been determined to get that all bloody week.
So yeah.
Yeah, but actually, people on Aaron's don't tend to do much or know much about title splitting. It's a very popular strategy, and there are people who just teach it. And it seems amazing that just a block of flats can be worth more just because you split the titles. I mean, I can understand them going up a little bit in value because they've all then got, but they seem to go up quite a lot just because you've split it. Certainly in terms of the lending, I don't know why anyone can contribute, but it just seems to happen.
Can Rhett talk a little bit about property filters for silly people finding potential title split deals?
Yeah, sure. Actually, Daphne and I, we met on the same course. Essentially, one of the challenges is finding these deals. I mean, obviously, you can meet people and then find them, but you have to help. That's how you find them. But on property filter, you have a template which goes down one track, which is where they've been filed as flats, as opposed to as buildings. There's another way of also unearthing the ones that have been filed as buildings. Either way, you'll be able to find them depending on if they exist locally. And then what you'll find is some areas just don't have flats. You'll have a concentration of family houses because the prices are so low. So that's one of the challenges. There's a template for it.
I will invite Rhett, if he's okay, short, but later on to have a look at property filter with us, because it would seem a shame for him not to, and for us not to benefit from that, if you're okay with that, put on the spot. Any more questions for Olsi? That was great.
By the way, just a quick thought on that. So we're in London. We do a property event every month. We potentially going to do the FOMO in London at some point. James will be there and he'll do his presentation. You can ask him any questions about all the details, how he does it, how he builds his team, and how he raises money. So that's something that we can share more. And I think locations is really important for these properties as well. It's like just the discount is not so. Discount is important. The title split is important, but the deal fundamentally needs to be in a great area. This is 5 minutes, 7 minutes walk to the train station. So in a great area. I think in London you can get these deals right now, blocks of apartments as well, and still make them work. But there you're looking at like a higher ticket price. Yeah, you're looking higher.
Yeah, Frank Fleck showed us a couple of blocks a couple of weeks ago on the course. Yeah, Amelia, please.
I just want to sort of like understand a bit more your part of the joint venture with James. what is it that you're doing?
So we met in the VIP, and I was going to manage his service accommodation portfolio that he had. He bought loads of properties in there. So I was working with him, we did the numbers, and I just couldn't get the numbers working. So I was like, I've done all this work, I spent 3-4 weeks, it's about giving value to people you're working with. And I think I committed to working with him. I gave him all the research. I said, this is not going to work, the numbers we're getting, it's not enough. And then he's like, I really want to work with you, which needs to find the right project. So we've been looking at loads of different things. We nearly bought a holiday let in Lake District for 1.5 million that I was going to work with. I go around and I meet loads of investors, I network a lot. So there's 2 investors that I'm working with. The only problem has been that we haven't been able to find the deals that these investors are comfortable with to go into deals with me. But because James has a lot of experience, his credibility and his companies and his trust is like, he's developed like over like 500 units. So he's been a developer. He has so much experience to give that when I'm bringing investors through me to him, we all benefit from the project. Meaning that James raised all his capital from funds, family offices, and wealthy individuals. So he has a number of deals he's doing at the moment, and I said, why don't I work in and bring in some of my investors, and we can benefit from your system, and we all get a percentage from it. So I guess I'm doing the deal sourcing and also networking and bringing people into our deals, because James doesn't do that. He said, I've got 5 people I work with. I always go to them because I'm for sure I'm going to get my money from them. But I said, I don't mind going and networking with people and bringing people
So
in.
you're kind of a little bit of diversification for him, really. So
Yeah.
probably those funds coming from
Scalability. The issue that he's got is scalability.
Yeah.
Like, he wants to get to 1,000 units in the next 4 years. And if he's only working with these 4 people, I think the more deals that we can do, the better it is. And if I'm bringing the deals and I'm also bringing in part of the financials into it, then we can scale that much quicker. So scalability and timing, and what he says is that people look at location. However, professionals look at timing as well, because one strategy works right now, and you want to make sure you're not just like, oh, I know how to do this, therefore I'm going to marry a strategy and be married to this, even though she's treating me really badly. So it's kind of going, okay, being flexible with that. So I think timing is really important, and the timing in the market right now is amazing, especially if you want to scale it. So that's why I've jumped from that model to this model.
That's great. Did I see a hand over there? Oh, you did notice at least. Okay, unless there's anything else, we'll say thank you.
Thank you. This was my first presentation, by the way, I've ever done. So.
Brilliant.